I see a lot of people overcomplicate the break of structure. Now in this video we're going to look at advanced techniques towards break of structure to avoid false break of structure, or also known as liquidity grabs, what some people call it. They say when price fails to break a zone, it's a liquidity grab, but there's some hardcore rules to avoid you guys getting caught up in false break of structures, and we're going to cover this in this video. It's going to be nice and short and easy, so let's get straight into it. So when it comes to break of structure, we can't overcomplicate the concept. Basically, we have market structure here. So we'll have two different types of breaks of structures, right? So we'll have this type of market structure, or we'll have this type of market structure here, right? So our break of structure can either come here towards the upside, or if price comes down here and breaks this, this is also your break of structure towards the downside here. So these are your two types of breaks of structures within this. Now within this circumstance here, we can have a break of structure above here, or we can have a break of structure below here, right? But many people get caught out and they say, oh, this is a liquidity grab here, and you know, I would have taken sells here. But in this video we're going to cover how to avoid getting caught out in any of these false breakouts, so you don't get something like that and you're caught out in here, and how you can basically get this continuation and make sure, okay, this break of structure, we should be continuing towards the upside here. So we're going to cover that in this video, and I'm going to basically teach you how it's done. So before we get into the video, can you guys please leave a like? It really helps get this video out to more people so they can benefit from this content. My channel, I focus to try give the best information I possibly can and make it very, very simple and not overcomplicate trading, because trading is not supposed to be a complicated thing. Trading only becomes complicated because we're human and we have emotions. When we attach emotions to trading, we make mistakes, and that's why many people find it hard to trade. But in learning concepts, it shouldn't be a difficult thing. It's like learning concepts when you're in school. So can we please leave a like, leave your comments, and subscribe if you're new? It really helps. And with all that YouTube BS, let's get into the video here, and I'm going to teach you about basically 4-step trading. Now, before I get into 4-step trading, I need you guys to let me know in the comments below if you want a full separate video on 4-step trading. 4-step trading is basically how I trade, and it's basically the 4 steps you have to do when you come to the market to take a trade. So, you know, simply made here, we can type it out here like this. So step number 1 is going to be daily bias. So this is very simple. When you come to the charts, you have to have a daily bias. Are we going up or are we going down? I have so many videos of how to make a bias, about full top-down analysis. That's going to tell you how to get your daily bias, so you can check that out. Number 2 is going to be market structure. So let's say you're trading London session, right? So if you're trading London session, when you come to the chart, is the market structure bullish or bearish? So that's very important to know. And we're going to explain why this is important for breakouts and stuff like that. So after that, market structure, we're going to be looking at, so we have here our daily bias, our market structure. Now we're going to be looking at trading zones. So our trading zones is going to be where are we looking to take entries from. Are we looking to take it above this zone? If price comes back to this zone, if price exceeds a certain zone. So that's going to be a very important role here, which is going to influence how you can catch your break of structure. Now the last step here, and number 4, is going to be basically your entry. Time frames. So your entry time frames, and or time frame, you know, could be something like 15 minutes, right? So that could be your entry time frame. That's not an M, that's a. So this is going to be 4-step trading. Now, if you want me to make a separate video on going how to get your daily bias, how to analyze the market structure, how to get trading zones, and what to look for in entry time frames, let me know in the comments below, and next week I'll make a video dedicated onto this stuff here, right? So how is this going to influence break of structure? Well, if the daily bias is bullish, we should be looking for buys, right? So if we clear all of this, when we're going in an uptrend like this, for example, we have to have our points of interest, right? So our points of interest are basically the areas where the big swing was created, right? So if we draw this something like this, this is your uptrend here. So now let's draw something like this, okay? So this is your break of structure, this is your break of structure. For price to invalidate this move, it needs to break this low here. This low needs to be broken for price to invalidate this move up. Regarding we are bullish in the market. So let's remove those and just keep this low being respected here, right? So what we can do instead is we can draw a line like this, or a nice box here. So this is your box, right? And then this is the low that needs to be respected. Oops, wrong line. Where's that line? Here it is. So this is the low that needs to be respected. It is very normal to see in a pullback on lower time frames that price is breaking structure like this. This is where people get caught out. They say, oh, this is a break of structure, I'm gonna take a sell. They say, oh, here's another break of structure, I've seen this twice, I'm gonna take a sell. Then they get this, boom. And they're like, what happened? What you have to understand is that price, is in a macro uptrend. We're looking at our daily bias, and that's where step number one, daily bias, is very important. Price is in an uptrend. This is just taking, you can say, it's breaking structure towards the downside, but all it is a pullback. These breaks of structures are simply just pulling back, price pulling back before finding support, respecting its lows before continuing up. If you're a big guy, you want to buy things at a discount. When you go to a shop, if there's a discount, you want to buy things at a discount. So same as people buying currencies, they don't want to buy at an expensive price. Depending on how the day's going, they rather buy at pullbacks, right? So they want to buy at a discount. And this is all collecting liquidity. And this is where people in the smart money concept world say, okay, this is taking out buy side liquidity, But really all it is that, yeah, there are people here trying to buy, but at the end of the day, we need to know where our structure is. The reason is that this was the high point. This is just a pullback. And as long as this low is respected, then this price should continue up. If we saw this break below, this is where things would change. But people trying to take break of structures here, retail traders, the only thing why this is not working is it's just counter trend. So it's very simple. It's not about taking out liquidity, looking for positions. Remove all of that out of your head, in my opinion, when trading price action. If you like to trade that way, trade that way. I have nothing against it. But fact is that price is just performing a pullback to the relevant zone before taking price up, right? So I can even give you a quick example of that, where you can see that happens a lot in the charts here. Let me show you remove drawings. And if we go back to something like this here, right? So let's see. This is a perfect example here. So we have a nice zone here. Boom. We see this. Oh, break of structure. Sells. We're going up in the market. Where does price pull back? To this last. Remember, we're not wrong until it breaks this low. So any pullbacks into here will give us the opportunity. So this was not a break of structure. And this is what people have to understand, is that you're most likely going to get your fake break of structures when it's counter trend. But now, when it comes to going to the upside, right? So when we see, okay, is price breaking above the zone? This is where low traffic areas become very, very useful. Now, I made a full video again on low traffic areas, but basically what they are, it's an area where there are clean candles. If you have clean candles like this, and we get a break of structure, let's say market structure now converts to bullish, and we start breaking above this high, daily candle is also bullish, so daily bias is bullish. If we start breaking above here and closing above here, this will be a valid break of structure. Why? Because our next target is here. This is a clean area that we can fill to this zone. Many people look for a break of structure, for example, something or like this. Let's say this candle closed. Yeah, for example, this. We'll take this example very, very easily here, right? So let's go and clear all these drawings here, and we'll look at this example. And this is where people get it wrong. We obviously you have to understand, this is your market structure here. We obviously have a resistance here, right? So this is your top end resistance. We also have a resistance here. So let's say you're looking at this and you're like, okay, price closed above this zone here. This is the candle closing above. You took a trade. So this is what you're seeing here, right? Let's say you never saw any of this stuff. So you're like, okay, this is the main structure. I expect price to continue up bullish now. So this is your break of structure here. You're like, this is a solid close above this zone here. I'm going to be for, just for reasons here, just for an example, I'm going to target this next structure here. You're forgetting that, first of all, we have wicks. Wicks are very, very, very important to get clean breaks of structures. And this is something I forgot to mention in the beginning of the video. But if you have wicks, you need price to close below the wicks. Many people get caught out and they see price closing above structure, but there's a wick. This wick here is actually a whole zone on lower time frames, because wicks on lower time frames, wicks on higher time frames are candles on lower time frames. So there's a reason why those candles formed, and this is creating a whole zone here. And if you extend that zone, you'll see this is where you get the fake out. And if we go next candle, boom, it rejects from this zone. Now you don't know where it will reject for this zone, but let's say we got a candle closing above this area here. Yes, this will give me full confidence that we're going to go tap into this area. So this is where clean candles make sense, because if we're getting a closure above this whole zone here, like this, then we have a clean candle here to fill, and this is where our target's going to be. So many people are saying, okay, this is the break of structure. We broke the most recent structure. But no, we haven't broken any structure. We broke this structure, but we're still in this structure here. And this is where people get caught out. And then this candle immediately reverses on them, right? With break of structure, if we remove drawings here, is that you have to target things on the relevant time frame. So if you're looking for break of structure on the 15 minutes, you have to target 15-minute structure. You can't be saying, okay, price broke this structure on the 15 minutes. The 1 hour should reach this high here. No, that does not make sense at all. Why does that not make sense? Well, because you have to target the relevant structure on your time frame. So let's take the 30 minutes. So now let's say we're looking for 30-minute break of structure. So we're bullish here. We're in this range. Where can we find a good break of structure here? So we obviously have this area right here. You can see, and we'll draw a nice box to make it nice and clear. This has obviously been a big interest point right here. Right? This is the most recent, but the wicks is what's important. What happens here? We have a target at the top of the range here. Let's rewind all of this. So if we're looking for a break of structure, we're bullish, price has been trending bullish. This is where everyone gets caught up. But your main interest point is going to be, first of all, the top of where price broke out of. You see, price broke out of this zone basically here. And it's not going to be exact, but you can basically draw where price comes back to. If price is breaking this low here, this is where, okay, this looks like the trend is changing. But within this, for me, this is just a pullback. And this is where it gets a bit more advanced. And I have in-depth videos of how to read structure like this. But when you know your daily bias, this should be very simple. The deeper price pulls back, the deeper you get these pullbacks, the more opportunity that should be to take price to the upside, right? When you know your daily bias. But if you're trying to sell when price is bullish, this is where you're going to get these fake out, this false break of structure, because this is only breaking lower time structure, but this is not following the overall trend. This is where people get the concept really difficult. Oh, they said this took liquidity from the downside here and is now pushing up. Oh, it took another liquidity grab. Yeah, you keep taking all your liquidity grabs and getting it wrong. But reality is you're not following the trend, and when the trend is bullish, we should be looking for breaks of structure to the upside. So now let's say, okay, we look for break of structure here to get continuation. Still nothing, rejecting. Now we get the close above. So with this close above, yeah, you can take the trade just on this, but you're going to target the top of the range here. But you see, you get this candle that pulls back on you. That's normal. Pullbacks always happen in the markets. On lower time frames, you see how that forms, but it's respecting the original breakout. On the 15-minute, this was actually the best option right here. It gave you even a better option, but we're concentrating on 30-minute here. Next candle, boom, gives you some continuation here. Next candle, what? Pulls back on you, but still respecting the breakout, you see? So eventually, okay, good. This one pulls back down, still respecting. You're still fine. Structure is still being respected here. And eventually what ends up happening is that we end up getting the move towards your target here, right? So as you can see, this was the breakout candle, and this is why I don't like trading on breakouts, but your trade is completely fine here. Looking for pullbacks and for positions within this zone here is going to give you the opportunity, but this would be considered a good breakout. Closing above the wick here, closing above your zone, clean candle to the left, targeting the highs, should be a clean and easy move, following the trend, using the 4 trade rules, right? So that rules I gave you in the beginning of the video, that's how simple it is, right? So if we now continue and try look, next breakout will be above this zone. So we have to wait for a candle closure above. Here's your candle closure, boom. Again, Remember what I was saying? This was not above the wicks. This candle here was in the wicks, doesn't count. This candle now closing above the zone. High chance you'll get a small pullback towards this zone, but this is your breakout candle. For me, this is continuation. So now we should see continuation. There's your continuation. And I don't think, and there's more continuation. And you can see the result of the candle that broke out. Everyone would have taken this candle here. You see? Long position here. Boom. They're taken out by this wick. But what you have to understand here is that price needs to close above the wicks here, right? So what happens here is that, and this is what people don't understand, is that they keep seeing this break of structure breaking towards. It's what people don't understand. They keep saying, as I said in the beginning, the break of structure breaking towards the downside. Big guys are just trying to get buys cheaper, right? So they're taking liquidity from the downside. Here's another liquidity grab from the downside. But the candle closing above the wicks is the one that gives you the continuation. You don't have to be in the move from here. You know, if you've ever seen the whale with the small fish on it, the whale is the big guys. We just need to be the small fish. So getting moves within here is obviously beneficial when you get a good breakout out of a zone. So yeah, that's basically about it, guys. And it's pretty simple concept. And I wanted to clear that up and make sure that you guys understand in depth and, you know, don't get caught out in false breaks of structures. And, you know, the trend is your friend until it ends. It's very simple. So with that being said, take care, guys. Trade sharp. And until next time, peace.